Hello everyone and welcome back to your channel name. Today we're going to dive deep into a topic that many find confusing when it comes to insurance: deductibles. You've probably heard the term insurance deductible before, but do you really know what it means and how it affects your insurance coverage? Well, you're in the right place because we're going to break it down in this video. So stick around until the end because by the time we're done, you'll be a deductible expert. Definition of insurance deductible. Let's start at the beginning. What exactly is an insurance deductible? At its core, a deductible is the amount of money you, the policyholder, are responsible for paying before your insurance coverage kicks in to cover the rest of the costs. In simple terms, it's like the out-of-pocket cost you have to bear in the event of a claim. Why do insurance deductibles exist? Now, you might be wondering, why do insurance companies use deductibles? Good question. Deductibles serve several purposes. First, they help keep insurance premiums affordable. By having a deductible, you share some of the financial responsibility for claims, and this can lead to lower monthly or annual premiums. So, in a way, deductibles allow you to customize your insurance plan to fit your budget. Second, deductibles discourage policyholders from making small or frivolous claims. If insurance covered every minor expense, premiums would skyrocket. So, by having a deductible, insurance companies encourage policyholders to use insurance for significant and unexpected events, not everyday expenses. Types of deductibles. Now, deductibles aren't one size fits all. There are different types depending on the insurance policy. Let's explore some common types of deductibles. Fixed dollar deductibles. These are straightforward. You agree to pay a specific dollar amount out of pocket before your insurance coverage starts. For example, a $500 deductible means you're responsible for the first $500 of covered expenses, and your insurance covers the rest. Percentage-based deductibles. Some policies use a percentage of the total claim amount as the deductible. For instance, if your policy has a $10 deductible and you have a $5,000 claim, you would pay $500 to $5,000, and your insurance would cover the remaining $4,500. Combined deductibles. In certain cases, especially with health insurance, there can be combined deductibles. These are often seen in family plans, where there's a family deductible and individual deductibles within the same policy. Split deductibles. Split deductibles are used in specific insurance policies. Here, you have separate deductibles for different types of losses. For example, in car insurance, you might have one deductible for collisions and another for comprehensive coverage. How deductibles affect premiums? One of the most significant considerations when choosing an insurance policy is how the deductible amount impacts your premiums. Higher deductible, lower premium. Generally, if you choose a higher deductible, you'll have lower monthly or annual premiums. This is because you're taking on more financial responsibility up front, which the insurance company compensates for with lower premiums. Lower deductible, higher premium. On the flip side, opting for a lower deductible means you'll have higher premiums. You'll pay more consistently, but you'll have less to pay out of pocket when a claim arises. Practical examples. To help illustrate the impact of deductibles, let's consider a couple of scenarios. Scenario 1. Health insurance. Imagine you have a health insurance policy with a $1,000 deductible. You come down with a severe illness and incur $8,000 in medical expenses. In this case, you would be responsible for the first $1,000, and your insurance would cover the remaining $7,000. Scenario 2. Auto insurance. In the realm of auto insurance, let's say you have a $500 deductible for collision coverage. You get into an accident and the damage amounts to $2,500. You would pay the first $500 and your insurance company would cover the remaining $2,000. Factors to consider when choosing a deductible. Selecting the right deductible for your insurance policy is crucial. Here are some factors to consider when making this decision. Your budget. Choose a deductible that you can comfortably afford in the event of a claim. There's no point in having a high deductible if it leaves you financially strained. Type of insurance. Different types of insurance have different deductible structures. For example, health insurance often has lower deductibles, while auto insurance might have higher ones. Risk tolerance. Assess your risk tolerance. If you're willing to take on more risk to lower your premiums, a higher deductible may be suitable. If you want more security, opt for a lower deductible. Frequency of claims. Consider your claims history. If you have a history of making frequent claims, a lower deductible may be more beneficial. The relationship between deductibles and claims. It's important to understand how your deductible affects your likelihood of making a claim. If you have a $500 deductible, but the cost of your claim is only $600, it might not be worth filing the claim. Here's why. Small claims. For minor expenses, it's often more cost-effective to pay out of pocket. Making small claims can lead to increased premiums in the long run, which might surpass the claim amount. Big claims. Deductibles are more beneficial for significant and unexpected events. In such cases, they provide financial security and peace of mind. How to lower your deductible? If you've chosen a high deductible and would like to lower it, here are a few tips. Shop around for insurance policies. Different insurance providers offer varying deductibles for similar coverage. You may find a policy with a lower deductible that fits your needs. Bundle your policies. Some insurers offer discounts if you bundle multiple policies, like home and auto insurance, together. Maintain a good claims history. If you have a history of responsible claims, some insurers might offer you a lower deductible. In conclusion, insurance deductibles play a crucial role in your insurance coverage. They impact your premiums, the amount you pay out of pocket, and when it's worth filing a claim. Choosing the right deductible requires careful consideration of your financial situation, risk tolerance, and the type of insurance policy you're dealing with. Understanding deductibles is a vital part of being an informed consumer. It allows you to make decisions that not only protect your finances, but also ensure you have the coverage you need when unexpected events occur. Thank you for joining us today in Unravel.